Good morning or good afternoon, and thank you for attending our Ask the Expert call. Today's topic is 2019 New Economic Laws and Sales Tax Compliance, Part 2. Our speaker today is John Perry, Director of NetSuite Sales at Avalara. My name is Angela Tice, and I'm the Regional Director and National Membership Chair for the CFO Leadership Council. I just want to do a little bit of housekeeping before we actually get started. You might have noticed that your lines are muted, and that is so there are no distractions while our speaker is talking. However, the objective of this webcast is to make sure that our speaker answers your questions from Tuesday's call. So we certainly encourage your questions and comments. Please feel free to use the questions area to communicate. If you were not on the first call, we will be recapping the presentation so that you can really think about what details you'd like to know more about, and then again, put those questions in that questions area to communicate. I'm going to be monitoring that area, and I'm going to interrupt our speaker as I see those questions and comments come through. For this presentation, because it really is the second part and really not a presentation, there is no CPE for this webcast. Again, it's really because it's the second part of that first webcast that happened on Tuesday. And again, we will be recapping a lot, so you will be receiving a lot of information from our presenter. And I think we're just going to jump right in. I think that's really all the housekeeping. If you have any questions, again, just use the questions area. I will be monitoring that. So to present our speaker, I'm happy to do that. John Perry, again, Director of NetSuite Sales at Avalara. Avalara is the leading provider of cloud-based software for sales and use tax compliance automation. He joined Avalara in 2008 as the Director of Enterprise Sales and has since held several management positions within the company. John began his technology career working for Sun Data, a principal provider of IBM AS400 hardware, software, and consulting services in 1993. He's worked for premier software and business process outsourcing firms, including ACS Inc., now a Xerox company, and Hewlett-Packard in his 26-year technology career. Again, John, thank you so much for coming back today and really taking on some more in-depth questions from our audience. I will, kind of let you go through your highlights and whatnot, and I have some saved questions from the last webcast, so I'll bring those to you as well, just so that everyone on this call can kind of hear them again and hear your answers again. So with that, I'm going to hand it over to you.
All right. Well, thank you so much, Angela. As you were giving my CV, I was feeling, man, I'm getting old. But appreciate the opportunity to talk to the folks today. I do want to say that I just want to make clear that I can't provide tax advice, and what I'm sharing is anecdotal and best practices information. I'd encourage everyone on the call to seek, information specific to your needs from your tax professional or CPA. But, we are happy to provide all different types of information. We know everybody's business has got its own nuance. And, the goal of the call today is to get some information to you that is actionable. So in recap, what we spoke about last week is the Wayfair ruling that occurred last year. So in summary, South Dakota last year challenged 2 prior Supreme Court decisions. And in so doing, those prior decisions held that physical presence in a state was requisite for sales tax collection, and South Dakota won. So physical presence in a state still establishes a sales tax collection obligation, but states are now required or are requiring out-of-state sellers to collect sales and use tax based solely on economic activity in the state, which is what we call now economic nexus. And Wayfair didn't create a bright line test like physical presence rule did. And, there are different nuances depending on the state. As we stated in the first presentation, there are different thresholds, there are different requirements depending on the number of discrete transactions in a given state. It can be the sum total of all sales, including tax-exempt sales in certain locations and not in others. And therein lies the challenge for most businesses. It's not consistent from one location to the next. So there are some different opportunities that those on this call might wish to take advantage of. For example, Alabama, which was one of the first states, in fact, they started a juggernaut on economic nexus even before the Supreme Court ruling. So back in 2015, Colorado, some other states actually tried to get legislation passed locally that had economic nexus type requirements. But for purposes today, they are actually giving a bit of an amnesty, even though they were one of the first to pass the legislation. And Angela is going to share one of these questions that I'm sure is top of mind for most of these folks on the call. When do I have an obligation? Let's say I did, trigger Nexus in Alabama. They're actually giving an amnesty until October 1st. So even though the law was passed soon after the Supreme Court decision, states are offering some amnesty periods. They recognize that this is burdensome for many businesses. And in order for you to be compliant, they're giving you a pass and say, yeah, I know we passed the law, 3 months after the Supreme Court decision, but we're not going to enforce it until October 1st. So with that, Angela, why don't we share with the group some of the questions that came up and that I answered in the first session?
Sure. So I'll take them one by one, John, and this way you can, I guess, answer them again, right?
Yep.
Sure. So the first question was, what timetable do you use to determine if you've met the economic threshold?
Yeah, that's we've somewhat addressed it here.
Yeah.
It's really state dependent. More often than not, they are saying from the point that the legislation has passed, from that point. Now, Supreme Court changed the law, and then the states have fallen suit and passed their own economic nexus laws. So with some exceptions, just as I've shared about Alabama, the general rule is you are obligated from the point that the law was passed into law in that state. So it's not retroactive. It can't go before the legislation was put in place. But here again, and you're going to hear me say this many times, I don't mean to be evasive. It's just that every state has its own nuance. Kansas, for example, you can trigger it with a single transaction. One transaction in Kansas is sufficient to connect you with Kansas and require that you register, get a business license, and file and remit. In other states, it can be $500,000. That's California. They actually came out initially and said 100,000, and then within weeks they rescinded that and said 500,000. So as you can tell, there's a lot of uncertainty even at the state level. But generally speaking, to answer that question as best I can, it is when the law is in effect in that state. So it doesn't go back necessarily to the Supreme Court ruling, it's state dependent.
Right. Very good. So, and with that, we have a question actually, and the question is, where can you find a list of states with amnesty periods? Is there a place?
Well, Avalara offers, there's a blog that we keep up to date literally daily with what's happening. I would, without overly promoting Avalara, it's just a wonderful place for you to find relevant detail. I will put this up on the screen now so you can see it. If you just go to avalara.com and to our blog, you can see this is a quick recap. The collection requirements, the amnesty period. So we will promote and help folks navigate to this information wherever possible. And I would also, again, in our last call, we talked a little bit about streamlined sales tax. This again is a way, if the only trigger that you have is economic. The streamlined sales tax initiative was put into effect over 10 years ago to try and make compliance easier. So today it's a consortium of 24 states that have made taxability rules consistent, sourcing rules consistent, and there's a single registration for all of the states. Now you can choose, up to about a year ago, you were compelled to claim all 24 states irrespective of your physical presence. Now you can pick and choose which of the 24 SST states you would like to be a part of that program. The beauty of this program is that if the only obligation you have is through economic nexus, which is to say you don't have physical presence, a warehouse, salespeople traveling into states to do repair, if you don't have any physical connection in a state, you would be deemed a volunteer. So Avalara and any one of these other providers that you see to the left can be your certified provider. In so doing, you would be a volunteer even if you're passing economic nexus triggers in SST states. So Avalara will calculate for you for free. The beauty of this further is that one has audit immunity in all 24 states if you are part of the full 24 state complement. If you are under audit in any one of those states, it is Avalara as your certified provider who attends the audit on your behalf. And anecdotally, it's unlikely that they're going to disagree because we're actually getting the rule rate and boundary data from the SST states. So you don't always have, if you do have physical presence, if this doesn't make sense, there are other locations that you might have physical presence in, and it doesn't make sense. But I did want to offer this because it is, in my mind, a bit of a life preserver. If you're only getting triggered for economic nexus and you're in a number of these states or you're doing business in these 24 states, I would recommend that you take a look at it. So, this is a little bit of a recap on SST from our website and the convergence. So there's very detailed information here that you might find very helpful.
That's great, John. Thank you for sharing that. That's terrific. I can go on to the second one. This one is, if you determine the company has triggered economic nexus, do you have to file back to the date the state adopted the law or the date you register for sales tax number?
Generally speaking, it's when the date that they passed the law. So I would look and see, there are different options for you. Avalara can actually file, it's somewhat like if you don't meet the threshold for a VDA, like you haven't done that much business yet, we can do a back file, and we'll also affix a penalty abatement letter from the state saying, here we're trued up now. We didn't know, we triggered it. So we're going to back file for the past due sales tax, and Avalara, if we're doing this on your behalf, we can work with the state and get a penalty abatement letter. It could be that you've passed a threshold such that it would require some kind of voluntary disclosure. But here again, you may want to look and see if there's an amnesty program available. I think states are understanding that this is in many cases an undue burden on business, and they're giving you somewhat of a pass. But to answer the question, generally speaking, it is when the date that the state passed that legislation and you've triggered nexus. If you've hit it, like in Kansas, for example, with one transaction, you're probably going to have to go back to when Kansas passed the legislation.
Wow. You have to keep on top of the states, right?
That's exactly right.
Yeah. Just one more thing to do.
Well,
Okay.
yeah, that's the burden. I mean, I feel, especially for small businesses and startups, that they're focused on revenue. They're trying to sell and make their business grow.
Right.
And now they're burdened. You can't hire enough people with the experience and understanding to do this.
Exactly. Exactly. Um, Okay, I'm going to go to the next question. And again, I just want to remind the audience, if you have a question, please feel free to use the questions area so that John can answer those specific questions for you. Again, that's the reason for this second part of the webcast today. So I do hope that you've brought some with you. And with that, I will ask the next one. And that is, what are the best resources for determining taxes on SaaS or HaaS revenue streams?
A great question. This gets into the realm of taxability. As I shared in our last session, SaaS, which is software as a service, when I started at Avalara in 2008, there were about 3 states that considered SaaS taxable. Now, today, it's something like 22, 23 states, and you get situations like in Texas where it is taxable, but only at a reduced rate. So it's taxable at 80% of the base rate. Here again, as you can probably tell, how do you manage this? You have to get out a calculator to figure out what you're going to propose or invoice. And there are options for you. You know, you can go and have a taxability study done, or, you know, what, again, at risk of sounding salesy, but I do want to help you understand what options are available to you. The way that Avalara does it is through an association of what's known as a system tax code. In other words, we've done all the research for every state and the type of product or service item that you're selling. You append this code to that service item, and Avalara will automatically determine what the proper taxability is. There's also something known as a tax exposure analysis, where we will go in and, you know, as a separate service, look at your product and service items and give you guidance on where these items may or may not be taxable. But this is a moving target. It's always a point in time because these rules are ever changing. And one of the benefits is if you use a service like Avalara, and there are other options, of course, we will keep that tax code up to date for you. So if today 22 states consider SaaS taxable and next month it's 24, we'll tell you there's no action that you need to do, but from a customer service perspective, we would alert you that this change has occurred, but there's no action necessary. We will keep that tax code up to date when new states come on board or states drop off, as sometimes happens as well.
Again, really good information, John. Thank you. Another question. What do you recommend, you know, the people in the audience here do to stay on top of the tax technical know-how? I mean, you know, it's just so obvious, but what you've been explaining so far, there's just so much to know. It truly is more than a full-time job. So how do they do that?
Yeah, this is, you know, the quandary many businesses are facing today. I think we mentioned last session that the tribal knowledge is that you outsource payroll. I used to inquire as a part of every discovery call, I would ask prospective clients of Avalara, do you outsource your payroll? And inevitably, from the smallest startup to the largest Fortune 50 company, the answer, well, almost all the time was yes. And then I would, you know, kind of challenge them. If you outsource your payroll, then why are you struggling with managing compliance, which can be extraordinarily more complicated? And it just hasn't become woven into the tribal knowledge of business yet. That's my you know, my best guess. And, you know, again, if you come to our resources, this is just Avalara's landing page on our website. If you go to resources and you come over here to South Dakota versus Wayfair, you know, you can do a quick check of your nexus. You can see what do, you know, sellers need to know. Here are the states that have passed nexus laws. Missouri and Florida are the only ones, you know, Oregon, Montana, Delaware, you know, they do not charge sales tax at all anyway. So you don't have to worry about it there. And if you wanted to see all of the thresholds, and this is updated as new laws are passed, you know, you can click on this link and see the actual legislation, Or you can see we've given a highlight, a summary is basically, what are the economic nexus thresholds and triggering obligations. So you can see as I go through here, it's 100,000 or 200 separate transactions. In California, it's more than $500,000, irrespective of the number of transactions. And then you get into Connecticut, you can see they've changed thresholds. It's fluid. It's absolutely changing all the time. So this is a great site just to get some information and quick resources. And then again, if you come down to the bottom, there should be a link to our blog. It's if you go to the blog here, this is literally every day what's happening. This is as of yesterday. Wacky Tax Wednesday, any tax nerds out there, boy, you've got plenty of content for you to keep busy. But you can put in specific, hey, I'm curious about something to do with my state, and it'll link you back to specifics on the state you're in or the state you're curious about. Certainly, it's not all encompassing. It gives high level information, but I think it can be a little bit easier than trying to go to a state website and try and find an answer. Anyone in the audience who's tried to do that, I think can attest it's very, very complicated and you can almost never find what you seek.
Right. Yeah, and just all of those dates on there, it's amazing. And I know even when you were explaining the last time, you were saying even in some states, like depending on where it is in the state or something like that, or if you cross the line, so it could be, one amount in one area and then, miles
Yes, the
down the road.
way the jurisdictions are drawn is extraordinarily complicated.
Yeah.
And again, one can rarely make an all-encompassing statement.
Right.
In Michigan and Indiana, the whole state is a single rate. So the concept around tax boundaries and tax jurisdictions is irrelevant. But as I mentioned, and I think you're referencing, Angela, in Colorado, you can be one house or business next door and the rate could be double. And how in the world they determine that is beyond me, but it certainly can keep a CFO up at night.
It would certainly keep me up at night if I lived in Colorado and I had to worry about this. So again, that was that question, and I don't see any questions coming through. I guess the first time around, John, you really explained it, and quite honestly, I mean, I learned a lot. So it could just be that when people are dealing with it, and I don't know if it's on a daily basis because I don't deal with it, but perhaps they'll be sure to reach out to you. I believe. Do you have your contact information on one of the screens? I just want to make sure that it's there, and if not, you can share it if you'd like, if that makes sense.
I don't have it specifically, but would be happy to answer any individual questions that come in to the best of my ability, or search down. If you want to offer it out there, Angela, in a follow-up email, happy to do that on behalf of the guests today.
Well, thank you very much. I appreciate that, and we will do that. And I just want to make sure there might be another question here. Trying to get it off the thing. Hold on one second. Yes, there are a couple, so great. I'm just trying to see where it starts. In a SaaS situation, when the customer's management team that decided to make the purchase, the purchasing department, the payable department, the work that's being done remotely to multiple customer locations, how do you determine nexus? Ooh, good one.
Yeah, that's a great question. So generally speaking, now there are some states that have a concept, and of course we're in an acronym-rich environment, and they call it an MPU. And what it stands for is multiple points of use. So generally speaking, sales tax is applied where the benefit is received. And when the benefit is in the cloud, how do you know where the benefit is being received? Now, in certain states, again, this concept is very rare. Generally speaking, we go by where the billing is happening. But technically speaking, and I think this is a very astute question, because someone understands where is the benefit. But again, unless you wish to kind of portion out of my SaaS offering, 20% is being used in this location, 30% here, it kind of gets out of control quickly. Again, typical best practice is to go off of the billing address where the purchase is being made, the tax applied at that point. But there is still much discussion and some disagreement about what entails, how does one apportion something that's in the cloud? So excellent question. Generally speaking, we go and Avalara calculates off of where the billing is going to occur.
That makes very much sense. Great. So great question, great answer. Thank you. Again, I want to give everyone enough time. I mean, it's 25 minutes after the hour. We do have time. So I know if you have a question, please ask it. We can wait just a couple more minutes. John, I don't know if there was anything else that you'd like to add or even recap from the last presentation. If you want to let anyone on this webcast know, you're welcome to do that. We do have time. We can always get back the time. So there's both sides of that coin.
No, thank you, Angela. I think if nothing else, knowing that you have resources available where you can get some of your answers, talk to your tax professionals, talk to your ERP. One of the benefits Avalara brings is that we have relationships with most of the popular accounting systems, shopping carts. And if you have questions, we have verticals set around if you are running on Dynamics or Oracle or Infor or Epicor, one of those, there are a whole team who intimately understands the different nuances that each accounting platform presents. And a good place to get answers, because there are surely many, many questions out there, and many of them are unresolved. So, it's difficult to be in compliance when the state themselves haven't fully vetted what they expect. But I think if nothing else, if you leave this knowing that you have places to go to find more information and get a sense of your own obligations, then we've been successful.
That's great. And I do have a question about your company. How does Avalara price your service? How do you price?
Sure, great question. It's a usage-based model, meaning that you're paying for what you use. And at risk of losing everybody on the call, I'll use a cell phone plan as an example. But instead of minutes, you're buying transactions. And so in a discovery, we'll ask you, how many states do you currently have Nexus? And perhaps how many do you propose or expect to have Nexus? We get a little back of the napkin on how many posted invoices or completed shopping carts you would do in the course of a year, and that will tell us where you fall on our tiers. Everything is inversely proportionate, meaning the more that you buy, the lesser the cost per that transaction. And it can vary from maybe a few $1,000s a year to $100,000 a year. It's really dependent on your need. We have companies that pass us 50 million transactions annually. And we've just engaged with some of the, I won't name the names, but these scooter and rental services that you see all over major cities now. They asked me what the tier was above 100 million. And so we can scale with you. We can put a plan together that makes sense for your needs today, and then you can scale as you need. And this is true not only of our calculation as it relates to exemption certificate management for the manufacturing and distributors, the B2B companies out there that really don't have a problem with sales tax. They probably have a more pressing problem managing the collection of archiving and lifecycle management of exemption or resale certificates. So we would ask you how many you have today and how many do you expect in the course of a year? And we get a number. And again, the more you have under management, the lesser the cost per individual document. And then lastly, on the filing and remittance side, we simply ask you how many returns do you expect to do in the course of a year? And that too, there's a cost per form, and we can file and remit, do the treasury, manage notices, essentially just like a payroll service. So a lump sum is pulled monthly to file all of the remittances for the prior month. You don't have to worry about what the forms look like or if they've changed. You don't have to worry about the payment methods that might be specific to that state. You just make an ACH amount available to us and you're done. So there too, it's based on a volume of returns that we'll file, and the more you file, the lesser the cost per form.
That's great. Great. Good. Well, you know what? We've spent a half hour with our audience. I don't see any other questions. I'm glad that someone asked about, how you do it, because I think that just opens people's eyes about, why a service would make sense, whether it's Avalara or whatever. But,
Sure.
you sharing that knowledge with everyone is really, really helpful, John. And I really appreciate the last couple of days and all that you've shared with our audience. And I know that I've walked away with some value, I'm sure. So if that is it, we will share this. This is being recorded. So the first part is on our resources area of the website. So you can hear John's presentation if you have not heard it. And then these questions will be up there as well with the answers. And again, we'll have John's information up there. And so if you have a question at a later time, you're very welcome to reach out to them. And I'm sure they're going to be just as helpful as they were today. So with that, I will say thank you again, John, for sharing your time and your expertise with us. And I'm going to give everybody back a half hour of their day. How does that sound?
Fantastic. Well, thank you, Angela, and thanks to the CFO Leadership Council for hosting this event. Thanks so
Our
much.
pleasure. Thank you. Have a great rest of your day. And this does conclude our second part of the new economic laws and sales tax compliance. Have a great rest of your day, everyone.